Hello there, my name's Phil Suddle from Suddle Economics, a macroeconomic research firm. I just put out a new note to my clients on the topic of Argentina. And I think this is an interesting subject for two reasons. First, I've not written on Argentina for 4 years, but it's facing an important electoral period ahead. And we could see a significant change in government and in government policy, which could open up some interesting opportunities for investors. Second, before the election, I think the country faces a very challenging problem with managing its foreign exchange regime. Simply put, they're running out of reserves. And that could present a real period of trauma and crisis in the near term in Argentine financial markets. And any time we get some kind of problem with the IMF getting itself into difficulty, which may occur, that's something that can roil global markets. So it's certainly something that investors should be aware of. So let's take a look at what I call the land of Messy, Messy, and perhaps it's appropriate to focus on some of the things that are not going so well. In the first slide, you can see that inflation, which was a real problem in Argentina in the 1980s, and they kind of got on top of it in the 90s and 2000s, has roared back with a vengeance. And this is one of the few economies in the world now with triple-digit year-ago inflation rates. That's come at the same time that economic activity has been dreadful. You can see in chart 2 a long-run picture of GDP. And Argentina regularly has phases of stagnation, interrupted by some decent periods for growth. But the last 10 years has been an awful period. And the last few years has been an awful period within that longer term period of stagnation. So a macro mix that really is very, very unfavorable. In the short term, a bad situation's actually got a bit worse, quite a lot worse. And the main reason for this is that the country has been hit by a severe drought, which has weakened key export earnings in agriculture. The result is a balance of payments or a current account deficit that the country can't finance through normal channels. And it's therefore no surprise that, as you can see from the left-hand slide, chart 3, that foreign exchange reserves have plummeted from an already perilously low level in recent months, and the free market parallel exchange rate has depreciated sharply and is now trading at a discount of about 50% to an also weak official exchange rate. The consequence of these adverse developments is that there's a real risk that before we get to the election in October, second half of October, that we could see an out-and-out foreign exchange crisis in Argentina. And any time you get a significant foreign exchange crisis in a significant emerging market economy, I've been around long enough to know that's something that can ripple through global markets. So I'd like to end, if I may, on a slightly more upbeat note. And then the last couple of charts here, there's some positive messages. One would simply be that if things do go well in the election and its aftermath, and we get better policies put in place by a new government, there's quite a lot of potential for a reflow of capital that's fled Argentina in recent years to return. And of course, that's a big if. Lots of big ifs in there. But I would point out chart 5 here shows that the net international investment position of the overall economy has been significantly positive in recent years, suggesting that there is quite a lot of assets held outside of the country that could return to support a recovery under the right policies. Problem, of course, is that the economy has suffered for so long with policies from both sides of the political spectrum that have been somewhat damaging, that kind of restoring confidence quickly is a big ask. The second picture is a little more straightforward, which is to point out that even through these very adverse developments, asset prices in Argentina have rallied quite strongly through this year. Whether you're looking at bond prices, which became very depressed, that blue line in chart 6, they've jumped, and it varies across the different bond instruments, but I would say there's more upside there if we get a return of the centre-right government taking over from the centre-left populists who've been in power for the last 4 years. And the other interesting development has been the strength of the equity market, which I think has a lot to do with what happens under high inflation. Everyone wants real assets in that scenario. So I would say in a scenario where inflation is the number one target and is restrained, and maybe as a result of that the economy doesn't do quite so well, there's possibly more potential for external debt prices to outperform equities in the next 6 to 12 months. Anyway, I'll leave my comments on Argentina there. It's certainly a fascinating outlook, and I'd urge all investors to sort of be aware of what's going on. A good place to start with that is to read my note, and if you want to do that and you're not already a Subtle Economics subscriber, then here's how you can sign up for a free trial.